All right, and we welcome to the show Darcy Ungaro. Darcy Ungaro, best known to us people who hover around the dark recesses of the internet as the host of the Everyday Investor, NZ Everyday Investor, a podcast. NZ Everyday Investor podcast is New Zealand's top-rating, award-winning series that explores everything around building wealth. The mission is to help everyday Kiwis build new wealth using old and new tools. Darcy, welcome to the show.
Yes.
Long time.
Hey,
Long time
how are
no
you,
see.
Pat? Thank you for having me.
Really, really good, man. Listen, I've been mulling over this SVB bank thing for a few days. I've been doing some readings and some watchings, and I think I'm kind of have a handle on it. But as we always do here in BHN, we like being the dumbest people in the room. And so we get on people who run in this world to maybe have a chat with us about SVB to start off with. So why don't I just throw the ball to you? Should I throw the ball to you, or should I play a bit of a clip first?
Why don't you play a clip? Go for it. Let's ease our way into it.
All right. So let's have a bit of a look at what happened with SVB Bank. This is a little clip talking about, what is this one talking about? This is talking about why the bank actually collapsed.
In 2010, right after the '08 crash, the Obama administration signed what was known as the Dodd-Frank Act. In 2018, President Trump signed a bill that undid a lot of what Dodd-Frank had been set up to protect banks from collapsing, just like this.
In 2018, then President Trump signed a bill into law which raised the threshold at which banks would need to undergo stress tests. That number, $250 billion, SVB had just under that amount.
I think they had 249 billion. So what Trump did was he changed the laws around Dodd-Frank, and he gave them more leeway before they had to kind of bring anything into place to kind of go, hey guys, there might be a problem here. Here's a little very short clip of Donald Trump when he was president. Oh, we remember those good old days when Donald Trump was president, him talking about this.
That's why in the first 100 days, I have taken action to roll back burdensome regulations that undermine community banks. Especially, I know you're going to be very disappointed at this Dodd-Frank, right? No, it's out of control. And by the way, not only for community banks, for banks, period. We can take community out of that one, right? Now, Dodd-Frank, we're working on that right now, and you'll see a very big difference because you want to get out and make our country work.
So, in general, it seems like Dodd-Frank, there was like a level that banks could get into debt or have commitments to that were set at a certain level under Obama. This was brought in after the GFC in 2008. Trump came in and raised that limit. So there was a limit, which is now a higher limit. This bank was in that higher limit, right close to the threshold, and then they crashed. That seems to be the story. There's much more to this as to why they crashed, Darcy, but there's a bit of a setup for you to now pick up the baton and run and educate us all.
Sure. Yeah, and it depends on where you want to start, really. Like if we start from the regulation piece, maybe just to give a bit of a taster of why that's so relevant, is that we have an implied assumption that with regulation comes safety. And sometimes that's true. Hopefully most of the time that's true, but other times it can actually create unintended consequences, which in itself can be danger, which requires more regulation then to address. And so you have this kind of constant duct taping going on with most bits of legislation that govern how banking works, especially in the US, but also in New Zealand. There's a lot of adjustments that happen to make sure that should there be stressful events, kind of like what we're seeing right now, there's systems, policies, procedures, mechanisms in place to make sure that things kind of operate smoothly. So when you kind of take something away, the implied assumption is that you've actually just made something more dangerous and more likely to fail. And as in the case with SVG, that certainly appears to be the case, right? That because of the removal of that bit of protection, that's why this has happened. And maybe I don't
think that's the assumption. I think the assumption is, I don't know, I haven't read anywhere where the previous limit was, but let's say it was 150 billion, not 250 billion. The reality is the warnings would have triggered earlier. That's the assumption that I take from this. And because they didn't, they got right to their limit, and then the official group that monitors things got in and took over. So it's not that it wouldn't have happened; it would have been easier to spot sooner on. I think that's the assumption I'm making. Tell me if I'm wrong.
Maybe. Like I think if you really want to kind of unravel and point fingers of where this happened, like you probably have to use your whole hand in terms of multiple things. Like there's more than just one weak link here. One of them is something called, sorry, go ahead.
I was going to say there's also more than one person, because it's very important
Oh, yeah.
to know that yes, that happened under Donald Trump, but there were a bunch of Democrats who voted it through as well. So this is not all to be laid at the foot of Donald Trump, but this regulation change happened under the watch of Donald Trump.
Yeah, yeah. So I would say like one of the root causes of the issue, I believe, and I'm not saying that this is the fault of them, but it's just a situation and you just have to recognize it for what it is rather than saying, hey, we're going to be angry at this group of people, but it's the US Fed. And during well, actually, if you go back to 2008, 2009 with the global financial crisis, and then more recently with the March 2020 response, with how central banks, not just in the US, but around the world, responded to this pandemic situation. They were trying to protect us, trying to keep us safe, rightfully so. That's, hey, welcome regulators. We want to be kept safe every now and then. But unfortunately, the unintended consequence was that they created far too much money and kept interest rates far too low for far too long, which then created this inflation bubble. And I think one of the last times we spoke about you was around housing, and that was one of the serious unintended consequences of inequality and all that sort of stuff. So when you look at how it works in the banking world, you have this thing called the mismatch of maturities or duration mismatch. And what that means is it's kind of like when you're an investor, sometimes you invest in things for a long period of time to get a better rate of return. And while you're investing in those things for a long period of time to get a better rate of return, you still have short-term obligations. You still have to pay your mortgage, your food, entertainment, all that sort of stuff. If you ever run out of money or if you have a shock in the short term, you have to then cash in your investments to be able to pay for your short-term requirements. If there's been a change in interest rates because of inflation, which is because of quantitative easing and low interest rates for too long, then now you have a problem in that your value of your long-term investments are dropping because of the rising interest rates. And it's doing it for the same reason.
Let's unpack that for the listener. So what SVB did, right, was they were quite an attractive bank while interest rates were so low, because their rates for long-term bonds was 1.8%, where other banks were in the 0.2, 0.4%. So a whole bunch of money went into SVB because their rates looked really attractive. Then interest rates go up, and all of a sudden these long-term bonds aren't looking so attractive. In fact, they're underperforming, and other banks can give more money. So what SVB does is go, we're going to sell some of these bonds at a loss to get some money in so we can do more, and then raise some more capital. And investors saw that as a problem. They're A, losing money, they're B, looking for more capital. That means this bank is failing. We're going to pull our money out. And then there was a snowball effect as to why SVB pretty much collapsed under the weight of originally those long-term bonds, then selling off bonds at a loss, then raising more capital, then spooking investors. Failure. Would that be fair? That's a pretty good synopsis.
I think so, but just important to note that it's not just SVB or Silicon Valley Bank, Silvergate, Signature as well. And I believe that this is actually just an indicator, because those are actually riskier banks in my view, in terms of the markets they serve, crypto, startup communities, not exclusively, but a large portion of that. You're right. When interest rates were really artificially low, they had to search for yield. They had to search for rate of return, and that was found in their longer HTM or held to maturity assets. So they piled into that. But then when interest rates go up, drops the value of the bonds, their assets now are worth less than their liabilities. And then somebody sparks it off like Peter Thiel. And then next thing you go, everyone's freaking out because we all have access to information now, like right now. So if that happened, of course, we're running at the bank, right? And we're taking our money out, and that exacerbates the problem and forces the bank to realize those losses. But what I think is important for us to consider, especially when you're in a country that doesn't necessarily have those issues, is that this can be a picture of what could happen. I'm not saying it will, and in fact, there's a lot of reasons why it certainly wouldn't, especially here in New Zealand. But I'm saying that could actually be a picture of what could happen just under normal circumstances when we're in a rising interest rate environment, which, as a reminder, is there to cure the inflation which was caused by central banks in the first place.
And also that kind of leans back to this argument, not that we're having this conversation today, about how much the current government, be they Labour or National, can do about these international forces causing inflation. I want to talk to you a bit about New Zealand banking, but this is more of a commentary bit, because I do kind of find it hilarious that in politics, they look for any means to criticize the other side. So these are a bunch of Republicans now, and I'm watching this from Brian Tyler Cohen's feed. He does a news show in America, an independent news show, and he's put some clips together. So credit to Brian Tyler Cohen for this, about what the right are doing in America to blame the collapse of the likes of SVB, and of course, because we're in a culture war, they're blaming wokeness for this bank falling over. Nothing to do with the Fed Reserve, nothing to do with interest rates, nothing to do with bonds. They're blaming wokeness.
See now coming out that they were one of the most woke banks in their quest for the ESG type policy, and investing. This could be a trend, and there are consequences for bad Democrat policy. And I think we need to keep an eye on all the banking sector right now.
I think that the system, I think that the administration has pushed many of these banks into more concern about global warming than they do about shareholder return. And these banks are badly run because everybody is focused on diversity and all of the woke issues and not concentrating on one thing they should, which is shareholder returns. Instead of protecting the shareholders and their employees, they're more concerned about the social policies.
So just today, Biden's top economic advisor, Cecilia Rouse, addressed reporters in the White House in the briefing room about what had just happened. And she assured everybody that the bank run we're watching is an isolated incident. No, it's not a big deal. It's just this one bank. It's not connected to anything else at all. And the fact that this bank failed, just like the fact that FTX failed, has nothing to do with the fact that the people who run it spent a ton of their time doing completely irrelevant crap that had to do with politics and changing American culture. Are you reassured by that?
That'll do. We've had another Tucker. So he didn't use the word work there, but basically he's saying very clearly that they're saying it's one isolated incident or it's isolated incident, which seems to be a theme amongst most commentators in America at the moment. The big banks seem pretty safe that this is one of the smaller banks. I mean, my mortgage is with SBS and Southern Building Society. So, they're a smaller bank. Not that they're related to this at all, but what I'm saying is there are smaller banks and there are the big boys like in New Zealand, the ANZs and the ASBs and that kind of stuff as well. But Tucker's obviously pointing towards because they're focused on politics, that's why this failed. Nothing to do with the bonds, nothing to do with whatever. Do you have any, that's more of a commentary I wanted to share with people. Do you have anything you want to share about those comments while we're here?
Yeah, the only thing is, and I've heard some pretty strong views on the left and on the right around this. What you just shared was probably middle of the road, to be honest. I've seen some pretty angry people yelling on the left and some pretty angry people yelling on the right. And then to me, it kind of just feels like a picture of a snake eating its own tail. It's actually completely irrelevant in my view. And I think when we try to approach anything in finance or wealth building, or especially the financial system, we need to recognize the fact that our morality often clouds our vision. And we often bring that bias that we have, left or right, to the scene, and it really confuses things. And yeah, maybe they've got something to say about that. Big deal. I think the core issue here, and what they're probably trying to say, those on the right, is that clearly somebody is distracted, maybe, because that is a logical conclusion, that they're distracted by something because they were not engaged in adequate risk management. The bulk of their portfolio was locked into long duration things to get yield without a clear hedging strategy, and that's the problem. And so what were they doing? Well, they weren't doing their jobs properly, that's for sure. Whatever they were doing is totally irrelevant, but I think it speaks to a bigger concern that we have, that whatever you do for wealth, whether you're into it or not, whether you own your own home and you have a mortgage or not, everything runs through the rails of the monetary system. So that's what I'm concerned about, is there a problem with the financial system? And I would say that, of course, the message is going to be everything is isolated, everything's fine, we've cleaned up the mess, there's nothing to worry about. But we always have to keep an open mind that things could get worse in an environment where there is a lot of other pieces of this puzzle that we're not talking about today that do have something to do with this.
Hey, before we leave, and we're speaking about regulation, we're speaking about banks, I want to talk about New Zealand very quickly, and I haven't set you up for this, so hopefully we can just run with it. National Party calling for a look into the regulating of banks or regulating of what's going on. But also I noticed that I think I heard Nicola Willis talk about competition, and certainly David Seymour talk about competition. And I'm pretty sure David Seymour alluded to American banks. like opening up New Zealand market to American banks for competition. So 2 questions. What do you think about the National Party's call for looking into the profits of banks and looking into the idea of regulating? I think they're being a bit wishy-washy with that, and they're kind of saying the right things to the populace without maybe necessarily, like Nicola Willis called for a short, sharp look with a narrow focus. In other words, maybe they don't want to find too much because it's narrow. That's the first thing I want to ask you about the idea of looking into regulations. And the second thing is about, what do you think about opening up our market to international banks to, as ACT would say, provide competition to help the consumer? I guess looking at it from a capitalistic point of view. Your thoughts on those 2 things?
Yeah, well, I think, like, if we're talking about what's coming out of Labor Light, I think is what some would call them, is that the regulation. And forgive me, I'm not super into politics, apart from the fact that I hate them all. Any help that they need, any help that they say they're going to bring to the table in terms of looking at banks and their profits and all that sort of stuff, in my view, is kind of like lip service. There needs to be a very serious independent investigation conducted at a much higher level, i.e. the Central Bank of New Zealand, the Reserve Bank of New Zealand, because that is very interesting. What happened in March 2020 is they didn't necessarily look at what was happening on the ground. They took their run sheet from what was happening overseas with the Fed. And I think that's probably what led to a lot of the problems that we have here. And so I think the review is important. The profitability, yeah, that's insane. But we have to look at both sides of all of those things, because we don't want a situation where our banks are weak. We don't want a situation where they do leave. And I know that they're using that as threats every now and then, that they're going to leave, go to Australia and just leave us in the lurch here. We do need a banking service, because that's the rails. They provide the infrastructure for our wealth. So we kind of, like it or lump it, we have to deal with it. As to opening up, I guess the question I would bring to that is, why is it currently closed up? Why are banks currently closed up? What are they afraid of in terms of open banking, for example? Why are new challenger banks disincentivized to coming here? Why is there a focus on, I guess, consolidation and focusing on the big players and making that safer for us? And I think that's probably more concerning, especially in a small market like New Zealand. We need to have a lot of small regional banks like SBS and a few others, but if it's harder for them to play the game, that's going to be problematic. But I don't think there's an easy solution to that, just like I don't think there's an easy solution to anything. I wish there was, but I think neobanks and I think decentralized finance are the 2 things that we should be looking to, rather than reform on the traditional banking sector.
Right.
Because, like with any creative destruction, you have to look at the new more than you look at the old.
Last little idea is, we were talking about this in the BHN earlier in the week, is one way that, like, we talk about a capitalistic system and the cream rising to the top and user pays, and the public will decide. Why doesn't the public just get all their money into TSB, Kiwi Bank, SBS, Cooperative Bank, these banks that are actually keeping their profits in New Zealand, and then problem solved, isn't it? If it was $6 billion worth of profits for New Zealand banks in New Zealand, isn't that, I mean, it's still profits, got it, yes, but isn't that one of the big concerns, that we, the consumer, could probably drive change in this market as well, if we all moved away from those Australian-owned banks?
Yeah, that's an interesting concept. I haven't really thought about that much, and I don't know enough about banking at that level to actually probably comment on that very much. But I guess you're right. Like, if we as individuals, that's why I'm quite into decentralized pots of power rather than a lot of centralization. If we as individuals exercise our own free will with our own assets and resource and put it to where we feel safest, then the free market decides. So it sounds like you're a free market participant after all, eh?
I've never claimed one or the other. I think that any ism, right? Any ism, whether it's capitalism or socialism or Buddhism or any of those isms, at their core have a lot of value to them. I feel that we as the species that we are innately corrupt. We're corrupted by things around us, and it's not the ism that's the issue. It's how people use that ism. Most of those isms are pretty amoral. It's human beings that are either moral or immoral within them. So I would say to you that would be my answer for any of those kind of titles. That it's the people who make them work or don't. I was talking to someone today. I won't even say what he's worth, but it's hundreds of millions of dollars. And he spanned his business nous and gravitas into a way of supporting the environment and giving funding to groups who are doing good work. And it's conscious capitalism. So it's the people involved with the isms rather than the isms themselves. That's how I kind of deal with it, Darcy.
Yeah, well said. No, that's good. I think, but yeah, individuals with their own resource exercising free will can actually solve a lot of these problems, in my view.
Yeah.
And so I think it's probably more like a centralization rather than an ism, but centralization versus decentralization. And if we're thinking about change in terms of what regulation is needed, needs to be changed, whatever the story is, or banks need to open up, individuals will probably bring that in rather than big corporates and government working together, in my view.
I think it's called centralizationism. I think that's what you say, Darcy.
Let's go with that one. Let's go with that one.
How do people find out about Everyday Investor? Where can they get it? All your normal places for podcasts and stuff?
Correct. All the normal places. YouTube, just Google me on the Google. I haven't tried ChatGPT to see if it knows who I am yet. That would be interesting. But yeah, definitely I'm out there.
All right, Darcy Ungaro, New Zealand Everyday Investor. Thanks for joining us, man. I really enjoyed it, and it has been too long, and we'll do this again super soon.
Sounds awesome. Thanks very much, Pat.